G'day traders, this is Adrian, and in today's lesson I'm going to cover price action. It's a short lesson on peaks, valleys, trends and reversals. Let's get started. What we'll cover in this video is market movement and what is a trend. Now, market movement involves the market moving in a zigzag type manner. What you'll see, as you'll notice on the image, is that the market has certain peaks, certain highs where the market turns downwards, and certain valleys or lows where the market turns upwards. In the upward moves, there are surges downward, and in a down move, there are surges upward. And you'll see that there are certain pullbacks with the red arrows in the opposite direction. Now, the zigzagging occurs in all three directions, up, down, and sideways. We will use it to our benefit and make profit from these movements, and the market has a tendency to travel in one direction for a length of time. These longer-term movements are called trends. A prevailing move in the market direction is a trend. It involves a series of peaks and valleys. An uptrend is composed of consecutive higher peaks and higher valleys. A downtrend is composed of consecutively lower peaks and lower valleys. You'll see that on this image. On the left, in an uptrend, the higher highs and the higher lows being formed as the market moves upwards. And in a downtrend, you'll see the lower highs at the top and the lower lows on the right-hand image as the market moves in a downtrend. Now, trends are relative to the time frame you are actually currently looking at or trading. For example, if you're looking at the daily time frame, a trend could last for a number of months. Meanwhile, on a 1-minute chart, a trend can last for up to 2 hours. While a trend moves in one general direction, either up or down, it usually will move up or down in a zigzag pattern. It's never formed in a nice, smooth, straight line. Let's have a look at an example of an uptrend. On this 4-hour chart, the market bottoms out and then rallies for 94 candles before it finds a solid ceiling, as indicated by the red horizontal dotted line. And you can clearly see in the chart that price is making higher highs as the market climbs. Now you'll see the image below shows the higher lows that form when price is moving upwards. Now in a downtrend, as the market falls, it makes a series of lower highs and lower lows. And in this image, you can see a series of lower lows being formed in a downtrend. Trends are broken down into different durations. Here we have a long-term trend. The main trend has a definite direction heading up, as indicated by the white arrow. And here we have a medium-term trend. The medium-term trend goes in the opposite direction of the main trend. The short-term trend goes in the same direction as the main trend, but is contained within the medium-term trend. So we have trends within trends. The main or overall trend is the trend direction carries the most weight. When looking at several different time frames, the highest time frame will show you the main or overall trend direction. It's always a good idea to see what the longer term time frame is doing. A setup for a short trade may not run out too well if the next higher time frame is moving in the opposite direction. The trend is the direction of the market that will present us with the best trading opportunities. I always consider the time frame I trade to be the medium term time frame. That's it for this short video on price action. I look forward to speaking to you again in the next video.